Alright, good morning guys. Thank you guys so much for tuning into today's live stream. Today is May 5th, 2025, 5/5/25. That's kind of cool. Yeah, to begin today's live stream, I do want to take a look at the economic calendar here. And it turns out that we have ISM services PMI numbers being released here at 9 a.m. Central Time. And so I do want to see how we trade there with that, and if we do contract or if we expand based off of the ISM services PMI numbers. But technicals here, coming into the actual technicals, I am actually wanting to see us take out previous week's high. So this is the weekly candle from last week, right? And based off of the way that we closed here, my easiest assumption is that I want to see prices take out the weekly high. So because it's a bullish, weekly power of 3, right? I want to see us take out that weekly high. And one thing I will mention is that the weekly high is also the same high. It is the same high as the daily high here. So because the daily high is the same high as the weekly high, I can anticipate for prices to complete because the daily high is the same high as the weekly high. I can anticipate for prices to complete the weekly objective within the next day. So within today, on Monday, I am wanting to see us take out previous week's high. But yeah, that is my kind of analysis here for the day, at least for the weekly time frame. Coming into the morning, I do want to see us. Well, it kind of really depends, right? Depending on how we close here on the 4-hour time frame, and overall the intraday time frames. Depending on how we close, will give me an idea of where prices really wants to go. So, depending on how we close, like I said, on the 4-hour, the 6-hour, 8 or 10 will give me a directional bias of where I want to see prices, where prices should go. And yeah, so we'll see here. Yeah, as of like I said, as of right now, today, I want to see us take out the daily high, which is also the weekly high. If you trade past this swing high right here, I would treat that as a market structure shift. So if prices can trade past this market structure shift level right here, like we could do something like this. Something like that, who knows? But I'm gonna wait until we close here on the 4-hour time frame and the 8-hour time frame for a intraday bias. it's really just now, it's just up to prices intraday to align itself with the higher time frame objective. I have an idea of where prices wants to go here for the morning, or for the weekly time frame at least. Now I just have to wait for a intraday model to align myself with that. We still have this pretty big SMC divergence between ES and NQ. So ES failed to take out previous month's high, whereas NQ, we did take out previous month's high. That is something that you do want to keep in mind, because if we do end up, if this is hypothetical, if we can trade past this daily market structure shift level, if we take out that level, that would be considered a shift in sentiment, and I wouldn't be bearish, or I wouldn't be bullish on the weekly time frame anymore. I would actually kind of switch narratives, and I would have to pivot, but that's if we do take out the previous day low, which is the daily market structure shift. The reason why I would treat this as a market structure shift is because here you can see here on Friday, we created this daily fair value gap, and whenever we opened up here on Friday, we traded it into this daily fair value gap and we expanded higher, right? If we break past this expansion leg, that would be a market structure shift to the downside, and we could end up seeing this liquidity get taken out. And it's not correct to do so, but it's more like it makes sense, because like I said, that bigger time frame SMT right now between the previous month's high with NQ and ES, that's pretty like big. It's a really big important factor right now. But I'm not going to force an idea just yet. It's more like a just in case if we do end up taking out previous day low, which is the daily market structure shift. But that is basically all of the technicals and fundamentals I want to go over with you guys. POTR. This is a company that I just recently did a DCF model over. And let me show you guys what I have for POTR. So it's not exactly, I've just recently started doing these discounted cash models. And essentially what this is an evaluation on a company based off of its future cash flows being brought back to the present. So I used all of its historicals here. I used the beginning of its data point, which is 2018, and I believe it went public here in 2022. But from the year 2018 to the year 2024, I recorded all of their data. So revenue, COGS, gross profit, and I did that for all of those years. And what I ended up using for estimates for my price per share is, so for growth rate, for the revenue growth rate, I just essentially used the average of the growth per year on its historicals. I didn't assume that it was going to decline over the years. I didn't assume that it's, constantly going to grow in growth rate. I just had a constant growth rate, the average of the historicals. And that's which I got to be 30.35. I'm sure that might not be accurate, right? Usually companies tends to like kind of, it's not always going to go straight up. It's it's probably going to average out, and growth rate could go from like 30 and then 28, 26, 24. It could kind of that decline, but that's just that's my assumption for the growth rate, at least. And I did that for pretty much everything here. These two cogs I actually ended up using from analyst estimates from a YouTube video I watched. I got these two estimates here, and then I just used the average of like basically numbers that were like relatively close to each other, right? I didn't want to use 32, 30. Yeah, I didn't want to use these like numbers here, so I just ended up using like the average of, let's see, the year 21 till 25 estimates. I don't think I should use a estimated year for my estimates. That might not be the most accurate approach, actually. So let's not do that. Let's do that instead. Okay, so yeah, I mean, walking through the DSCF, it's pretty simple, I would say. And yeah, the price per share that I ended up getting here was $7.38, $7 a share. And based off of the video that I watched, he seems like a pretty reliable guy. But Palantir is currently trading at $122 per share, and based off of the evaluation, and I'm not saying that my evaluation is, perfect. It's just, like I said, it's just a evaluation with a bunch of inaccurate assumptions, I would say. But like still, you want the price per share to be generally close to where the actual price is, but like $7 per share, does that mean that Palantir is overvalued? I mean, that could be a possibility. Another possibility is that there's another driver in this market, right? Where if there's like based off of the GameStop the GameStop thing, where people, they were shorting or whatever because I don't know, something to do with investors, and I don't know, but it could be like it could be that people, it's kind of like they treat it like a Dogecoin just based off of its popularity. I don't know, but this is something that I am currently watching, right? Like $125. This is its current market price, and its evaluated price is $7 per share. That's a massive it's yeah, but I mean, that's the DCF model. And I mean, if you guys have anything to comment and see if like I could do anything else to, I guess, improve, then I would suggest you guys put it down in the comments. One thing I'm not really sure of how to get is tax expense. I'm not I like these numbers here. I literally got from ChatGPT. I have no idea how a company calculates its tax expense, which, I just don't know. I don't know where these numbers are, but I did get the average of the 2023 and 2024. I didn't want to assume a negative tax rate, right? So, yeah. All right, so let's see here. We have about like 10 minutes left in the trading day, and like I said, I'm solely going to be basing my models here on the intraday time frames. I just want to see if we can align the intraday model with the daily slash weekly order flow. If we can do that, then I would really favor the upside. But with the way that it looks like we're going to close here on the 4-hour time frame, it's not the bullish candle that I'm kind of looking for here. It's pretty indecisive, or like rather weak. So I'm not going to really force anything. But yeah, that's basically all I have for the technicals. So that is something that okay. I read this article already. Essentially, China's not putting out their data, and it's not accessible. So like, we don't know where China's economy is at, and we have to make a lot of like it's these assumptions. I don't know how analysts comes up with these, but I'm like very intrigued on how they do. But yeah, just China's economy right now could be bad, could be good, who knows. It's very murky, or it's not even murky, it's just that we don't have any data to base off of. We don't have any data to base our answer off of, right? It's just, yeah. Let's see. So this is written by Andy Kessler. We have to keep that in mind because I can see us. I can. Here, let's see. What America needs is zero tariffs. I mean, yeah, tariffs is just. I don't think it's good for overall. Like, for both sides, you're just the sides that decides to implement those tariffs, or they're just isolating themselves, and it just not good for the overall economy, right? It doesn't really promote anything besides like maybe bringing back manufacturing jobs or something like that. But still, that takes time to be able to bring back manufacturing jobs, and just like even being able to create those power plants or factories to be able to bring back the jobs back into the United States. And yeah, a robust dollar. So strong dollar. We actually have been selling off. So deregulation and reduced tax rates. This I don't understand why. Because reduced tax rates would mean that we don't pay as much taxes. I mean, which is, I guess, good for the consumers, short term wise, but long term, considering the debt levels that we're at. Let's see. We are currently 36 like trillion dollars in debt, which is insane. So I mean, just that's crazy. Let's see. Facing the freeze of 2.2 billion in federal grants, Harvard is selling $750 million in bonds for a total. Endowment distributions when university is a business. That's so crazy, bro. private equity has its own liquidity problems, and isn't private equity is, I heard it's like, no, it's not a lot of liquidity compared to like the secondary markets, because you mean you're the total amount of players in that arena is just not as much as, like, you know, if you were to be a trader in the New York Stock Exchange. Interesting. Looks like we are starting to see maybe some sort of expansion here. We shall see. I don't want to force anything. Just being nimble and patient, not forcing. All right, let's see. Let's continue to watch. I like what we're doing here. We are starting to see this upside push, this push up. And if we can really get past this swing high, then we can really start to see some movement up, because that would be a market structure a market structure shift. Need some water, actually. Give me a second. But yeah, as it seems, we are getting this kind of nice push up here. So it would make sense for me to assume that we're probably going to take out the 4-hour swing high. Let's take a look on ES here as well, shall we? So we don't have any SMTs yet with ES, which is nice, right? Because if there's a lack of SMT, that means there's a possible chance of a continuation in that specific direction. And about like 24 seconds left or so. 20 seconds left. Let's see, the 15-minute high is the same high as the 4-hour high, which suggests that we're most likely going to continue to expand. There's the open. And what do? We took out the 4-hour swing high here. And let's see if we can break past this market structure shift level. So let's see if we can take out London highs and Asia's highs. But yeah, so we did end up taking out that 4-hour swing high, which was a draw for the morning, right? Like I said, it's pretty easy to, it's not easy to, it's just the way that we closed on that 4-hour candle suggests we're most likely going to take out the high. And which we did. And now it's just a matter of time if we can take out the market structure shift level or not. There we go. There's a market structure shift. So after taking out this market structure shift, I do want to see as continuation to the upside. More like movement higher would be ideal. And ES also took out that swing high as well. So that means there's still no lack of SMT, which means that there really is a chance of a possible, that it just strengthens the idea of continuation higher. All right, and so we did complete the morning objective. Don't want to stay on the charts for too long. So going into the pros and cons here from this week, you know, being able to take consistent trades is something that I, been constantly preaching, right? How am I supposed to take a consistent trade? How am I supposed to be consistent here when I'm trading? Well, there are 3 components to a trade that I always require. First, higher time frame objective. It's essentially the bigger reason why prices should continue in a specific direction. A model is how am I going to align myself with that specific time frame. So if the 4-hour is suggesting higher prices, then my model could be based off of the 1-hour time frame, right? Another example is, let's say the weekly candle like today is suggesting higher prices, and the weekly candle, the weekly highs is the same high as the daily high. So essentially my higher time frame objective is on the daily time frame. What time frame can I use or can I base my model off of in order to align myself with the daily order flow? I could use the 4-hour, I could use the 6-hour, I could use the 8 or the 10, so higher time frame objective, a model, and last but not least, an entry pattern that, is a fair value gap. And my second point, like I said, is just to reiterate that a higher time frame objective is, like I said, it allows me to understand where prices wants to go and why prices should continue in that specific direction, whether we are expanding towards an inefficiency or if we're trading back into the equilibrium of a dealing range. So that's higher time frame objective. And referring back to what I was talking about, fair value gap as my entry pattern, a fair value gap allows me to understand where there has been displacement, right? Where there's strength in the markets, where there's been, where just essentially prices wants to go. It shows that there's a willingness in prices to continue in a specific direction. And just some things I can work on this week, so continue to fundamentally evaluate a company, just really learning how to do those evaluations. And so based on its future cash flows, like I said, this is a discounted cash flow model. It discounts the future cash flows back into the present value to be able to find the enterprise value. From enterprise, I can get the equity, I can get the price per share. Just 2 things that I can do to really improve my evaluations is compare the numbers to the percentage of revenue and create a networking schedule, networking capital schedule to make it easier to calculate the change in net working capital. And it's a little bit easier to explain to you guys if I'm actually live streaming a DCF, which I could do. And some improvements here for this upcoming week: consistent trades, reviewing higher time frame objectives, and how am I supposed to align myself with that specific time frame, right? With a model. And whenever creating DCFs, I'm going to do one over, well, I already done one over Enter, so let's not do that. Let's do Meta. Amazon and Hood is Robinhood. And I think that's gonna be all for today, for this morning at least. Like I said, the things that I wanted to see has already happened. We've already taken out the 4-hour swing high, which was my morning objective, and we did end up having that 4-hour market structure shift. So now, if we're going to maintain bullish, this should become a swing low, a strong swing low. This shouldn't be trade past, and this is something that I don't want to see prices trade past, right? I want to see us, perhaps maybe maintain this discount level. At least we trade into discount and immediately bounce back up. But yeah, that's gonna be all